And welcome out, everybody. 8/13/2020. It is our Tackle Trading Halftime Report, our daily stock market show where we go through the charts, the news, the information, anything grabbing our attention across financial markets here as coaches at Tackle Trading, and kind of break it down for you guys, give you guys our insight into the markets on a daily basis. If you're a veteran of our community, welcome back. Hashtag Team Tackle right in the chat. As always, we appreciate the thumbs up and getting the analytics up there so that we can get the word out about this show each and every day and keep helping people out there across the markets. If you're brand new to our channel, click that subscribe button. Come back and join us every day. We do this each and every day that the markets are live. Got a fun show here for you today. A little bit light on the news front, but c'est la vie. I don't mind that at all, by the way. Boring days in the market, just another day to trade the market, and there's always an opportunity somewhere. We did get unemployment claims on a Thursday, the weekly claims that always come in. We're going to talk about jobs and what the reaction is from the market and what market implications are. A couple earnings reports out of Cisco and Lyft, more stimulus conversation between the Democrats and the Republicans. And Pompeo, as always, talking more about China and what he's seeing there. Welcome out. We got Matt, we got Mark, we've got myself, Tim Justice here. And how you boys doing? Let's start with you, Matty.
Tim, I am doing absolutely fantastic. I'm excited to be here for the halftime report to kind of break down the news of the day. And like we were talking in the pre-production show, it's a light news day. I just love that so much. So much. And maybe it's not a light news day in comparison to normal markets, and maybe we're just used to the craziness out there a little bit. But I do enjoy these light news days a little bit.
For the last about, I would say 20 hours, I've just been preoccupied with clowns, so I can't really get that out of my mind.
I can't get over it. Tim and I last night were like, what was in his head? Because there's only so many reasons why you would go into the woods with a clown.
Listen, if you try to get into my mind, then good luck.
We quickly.
I have no idea why I say the things I say 98% of the time. So
I'll tell you, it was one of the most genuinely funny things I've ever seen in my life. I was dying laughing.
I was belly laughing last night.
On the floor.
11.
Yeah, we were still laughing at 11.
Listen, it was a mix between it's 2020. If a clown asked me to go in the woods, I'd just say yes.
Go with it.
Or something to do with strangers giving me candy and what the hell. So
for me, it represented so much of 2020. It just did.
Yeah, there's no doubt about it. I got to tell you guys, not a lot going on in the markets here today, but like you said, Matt, you don't mind that at all. Mark, do you like a nice light news day?
Well, I mean, we talked about it on our Sunday prep show for the pro members this week, and we said this is going to be most likely a very, very light news week. It was just set up for that, and it is playing out just like that. And light news weeks are generally pretty good for trading. It can be a stock picker's market. Now, of course, this market is just one consistent swing trading rotation market. Tech start of the week down. What's tech done the last couple of days? Shocked, right? Because that's what this market has. Sell off one area of the market for a few days, rotate back into another area market for the few days. And it has this cumulative effect of just lifting everything higher and higher and higher.
Yeah, there's no doubt about it. And Matt, as we look at the charts here on the S&P, and I was talking about this in the daily email today, we are within shouting distance of the all-time high. I mean, we just had an incredible run here, 33.78. I know the zone of resistance up here is probably more closer, just like that 3,400 mark. Any trader would probably call it that. Matt, do you think we're going to test that this week? I mean, today, tomorrow, that'd be another 20 points or so. Feels like the market wants it, quite frankly.
Well, we've felt that way for a couple of weeks now. When you get to, and this is nothing new to the market, by the way, when you get to such an important technical level or a market event where everybody wants to kind of celebrate it, it kind of it's a magnet to a certain extent. It just kind of gradually inches its way up there, and then we'll see what happens when it does achieve the all-time high there. I fully expect the all-time high to hit. Does it get hit this week? Does it get hit next week? I don't know, but we could be in there today. You asked me that question yesterday as well, Tim, and what I was looking at yesterday was, we were already range up on the daily candle. You were coming into intraday resistance levels. And, even if you broke out, do you really have the juice to really kind of run, additionally on the backs of really nothing besides just technical confirmation here, because a lot of the market was already priced in coming into the cash open yesterday. Today's a little bit different. Today, from an intraday perspective, Tim, this is the cash open right here on the backs of the initial claims report that we'll break down here in just a little bit. You saw that quick price appreciation, and where did it stop? In its tracks, right there at that intraday resistance level, right there about 33.80 by 33.82. You're now looking at this from an intraday perspective. You're forming a little bit of a high base there on that 30-minute chart. And Mark, when we were talking, I don't believe it was yesterday, maybe it was a couple days ago, but both of us really like, 5-minute consolidation type breakouts, correct?
Oh, absolutely.
So when you're looking at this on that 30-minute chart, yeah, it's a really tight range. When you kind of break it down on that 5-minute chart, you're in that 33.74 to 33.80 level. You see that tight little consolidation here. If you trigger above that 33.80, you're only 18 points underneath that all-time high there on the daily chart. And on the daily chart, you were consolidating. Now you're kissing off the 9 EMA with quick price appreciation. Like we said yesterday, the volume is probably going to come in and support it. The volume did come in and support it. We're a little light today on the volume. There's a little bit less participation today, obviously with a little bit less news. But if you can break out of that 33.80 level, yeah, I think you can achieve that today. I think it's unlikely, but I'm kind of looking at it tomorrow.
Yeah, and obviously we're in a bull move here. So whether it happens today or tomorrow, I mean, the general trend has been intact here for a long time. I mean, one red candle, in about 10, 12 bars there. Just really, really impressive across the S&P. Marky, before we get into the individual news on unemployment, just what's your read on stocks right now? Obviously the uptrend, the casual trend, volatilities are coming down. That ATR number is coming down. So we're not getting the big moves, but the trend's intact. Mark, what's your take right now?
Play your technicals. Once again, the market's insane, but it's also very, very, very easy to read right now. I mean, it's that tech. I mean, you go back to that tech rotation. Like, it is just the constant theme that's been going on for a solid month now. I mean, we look at tech. I mean, this is in the last month, 3 solid tech sell-offs, and they weren't market sell-offs. The broad market wasn't selling off. It was tech specifically. Tech sells off, everything else go off, and then tech has its turn again. Learning to read the market pattern. In fact, if you want to go back 2 months, this pattern's been going on. Tech sell off, rebound. Tech sell off, rebound. Tech sell off, rebound. It's the buy the dip when tech, dips. Especially 100% if it's not correlated with a broad market sell-off.
Mm-hmm. And that little 3-day retracement, Matt, on tech was very clean. We talked about it all week long. It did pivot yesterday. We're now confirming. Now we're approaching a breakout. This is probably a situation where if you made a slight entry, let's say yesterday with a small position on the Qs, you could buy another one on the breakout of the pivot. I mean, you could scale into that even more as it breaks above that resistance.
I think that breakout on the NASDAQ here is probably the cleanest on all of the indexes that you're actually looking at on the daily chart. When you're looking at the S&P 500 here, you got to like the consolidation, but look at kind of the fade action as it starts hitting into those resistance levels. I do like the 33.80, 33.82 breakout, but you don't have a clean breakout there as you do it on the NASDAQ. When you're looking at the Russell 2000, it's starting to form a little bit of consolidation. Mark, like we were talking about earlier this week, that swing trader rotation. As the Russell 2000 has got overextended, you're seeing that tight consolidation right underneath 1600. But I wouldn't say it's a clean trigger, right? You got an intraday high today of 1591. Yesterday's intraday high was 1596, and then the day before that was all the way up there at about 1605. And so you don't exactly have a clean trigger. Wait for that consolidation to happen in the small and the mid caps, and that's what we're seeing over the last 3 days. I expect that to happen over the weekend as well. Maybe we get some really good technical setups coming into the weekend in the small and the mid cap index. We're definitely going to be looking for those in the scanner report meeting tomorrow, as we do see that consolidation. So I like the consolidation I'm seeing in the S&P and the Russell 2000, and obviously you're going to see something fairly similar right there in the Dow Jones as well. But when you're looking at the triggers, and this is one thing I think that does add a little bit to the bullish sentiment out there, is when it is broadly supported by the market. For the first 3 months of the market, guys, it was all tech. It was all tech. But now you're really talking about all those indexes above the 200-day moving average, all of them kind of, especially the S&P, the Dow, and the Dow Jones, forming those high bases, looking for the breakouts. But when you're looking at the NASDAQ chart here, and you still got to have the NASDAQ 1A, 1B. But when you're looking at that NASDAQ chart, you've got a fairly clean trigger right there at that 11,283 level. If you look at this on an hourly chart, you can kind of see where it double topped right there at that 275 by 280 level, and now you're approaching it. So I think you got to be a little bit excited for that potential breakout. And when you're looking at a potential breakout on the NASDAQ, obviously you want to go to the big five. And what are you seeing on Apple? You're seeing a high base situation after very, very, very positive earnings announcement. The 9 EMA caught up to it. It's breaking out here today. You're looking at Microsoft's still stuck in a range, no trade there. You're looking at Amazon, obviously a Dow component, but most of these stocks are in all of the indexes. You still got to look at that potential on Amazon. And if the NASDAQ does break out and the Dow Jones continues its price appreciation, you got to be looking at Amazon here as a potential trigger. And the longer Amazon consolidates underneath that 3250 level, the more excited I get. So when you're looking at the NASDAQ breakout and the consolidation in the other indexes, I think you got to be a little excited for the potential breakouts in some of these other areas of the market.
And, as I was doing my scanning here today, Matt, a lot of those tech names did grab my attention. And there's several, I think, that are going to end up on our weekend reports if we don't catch the breakout before then. Some interesting chart patterns developing here today.
Amazon's going to be on the report until Amazon either breaks or never confirms and goes back down.
Yeah.
That's kind of where my head is at on Amazon. I mean, I like the nice little ascending triangle you're seeing here on Amazon. You could maybe call that a cup and handle. I personally call it an ascending triangle at this point, but we're really debating semantics there. They're both very, very, very consistent with one another. I think you got to be looking at Amazon and being patient and waiting for that confirmation above resistance. Apple's confirming today.
Yeah. And Apple had some good news. We'll talk about Apple here in a little bit. That obviously that chart on that breakout on Apple pretty
clean.
Did
Apple have good news, or did Peloton have bad news?
Probably the opposite. I think Peloton obviously having a competitor the size of Apple is not good for a growth company like that. But I mean, competition can help companies thrive, quite frankly. It doesn't necessarily put it under the bus for Peloton.
It does for me, but Peloton's been under the bus for me for the.
Well, that's not a stock you like no matter what, right? I mean,
no,
that's not your kind of company. Apple did announce that they were going to come out with and I want to get this right, Apple One, which is a virtual fitness product. I believe they're going to be launching that in October. I mean, Apple's the kind of company, they got the kind of cash, the talent, the reach, Matt. They can go in and compete pretty much anywhere they want, whether they should or shouldn't.
That's all they need. Apple's got the Fed. The Fed is buying billions and billions and billions worth of Apple bonds, which allows Apple to go out there and really compete in every space in the marketplace. So Apple's got the Fed's back. That's all you need to know. Or the Fed has Apple's back. More than the market, the Fed has Apple's back.
Well, take a look at Peloton here. We're talking about this one. This is one of the news stories I had today. Does this put Peloton on the do not trade list for you guys? I mean, that's a deep pullback.
I mean, I don't think it puts it on the do not trade list just simply because Apple makes an announcement saying they're going to get into healthcare. It doesn't mean every fitness type company is going to just go bankrupt. No, there's there's room in the space for multiple players here. I
Mhm.
just don't like Peloton. I don't like the company. And when I mean I don't like it, they make a quality product. That's not what I'm saying. I don't think that quality product it's a fundamental concern. Put it like this. I have the same concern about Peloton that Mark has about Tesla.
Mhm.
It's not an anti-Peloton, stance. It's just I have severe questions about valuation.
Well, negative PE ratio company, obviously, that's benefited here from everything's happening in 2020. Marky, any read on the Peloton news today? Apple coming in to compete. Peloton's got a little slowing momentum in the
Listen,
chart.
all I know is what I heard Matt just say. I'm like, I am so grateful Tim let me out of the bet, because and when that stock split news hit,
Finally, you admit it.
no, after the stock split, because whenever there's a news event, it's like AMC today, and we'll get into this news bit a little bit, had a little tidbit about their theaters. AMC is up almost 18%. News like never before. Now, news has always had a positive bump on stocks, but everything's gas on the fire in 2020.
What was the AMC news?
Well, AMC announced a couple things. One, that they're going to open up 100 US theaters on August 20th. And two, that it will charge 15 cents per ticket on August 20th. So if you want to go to a movie, you get 1920 style prices. Hey, it makes sense. We're in a 1920 economy right now.
Okay.
Might as well have the 1920 movie prices. So if you want to go to an AMC theater,
I'll make you a bet that says AMC doesn't open up on that date.
well, August 20th.
I'll make you the bet.
That's a week from now. So, this is not
I'll make you the bet right now.
How much are we betting?
Oh, well, I'll go pink bear with you if you want.
Now, they didn't announce they'd open all their theaters.
Oh, no. Listen, I'm just.
So you don't think they'll open up any theaters on August 20th?
I think your hesitation tells everybody exactly.
No, I'm thinking through the bet, because listen, this is what Tim, take a lesson. Make sure you understand the parameters of the bet.
Okay.
So if any AMC movie theaters open up on August 20th.
No, not any.
How many have to open?
Based on their announcement, whatever their announcement was.
All 100 and.
Mm-hmm.
That's not a good bet.
Okay, then AMC shouldn't be
only
up
one theater that has to close,
No.
and then I lose
My
the
point
bet.
is this. AMC's up 17.24% today, and yet even you, who likes maybe not AMC, but you like Cinemark, right?
I do.
You're looking
Cinemark.
you're like, I don't think they're actually going to do it. That's how insane this market is.
Mhm.
No, I like Cinemark. I'll keep lobbing naked puts at Cinemark occasionally. Not, it's a cheap stock, right? So.
Mhm. I have no interest in AMC here. I'll tell you that.
No, I'm
so,
not chasing AMC. Are you kidding me?
No.
I still think Netflix should buy AMC.
Back on I didn't want to go there, but we could if we want.
On.
They shouldn't.
Netflix could put Diana in every AMC theater on August when, Mark? Let's do it.
Maybe
August
they should.
20th.
Yeah.
But here's my question for you. Let's say your local AMC theater basically gives you free admission to see whatever movie. Would you go?
No, I would not go.
No.
Yeah, I wouldn't either. And I'm a movie guy. I'm just
no. There's no chance.
I'm not going to sit there for 2 hours being like, how much COVID? What's the viral dose?
Yeah, the whole time I'll be thinking like, does that person have COVID? Does that person have COVID? No, I'd be a paranoid nightmare.
Dude, I love the movies. Don't get me wrong, but one thing of being at home all the time, we have streaming.
I quarantined my daughter for 72 straight hours solely because somebody at her work had a test. No, I'm not going to an AMC theater.
Yeah.
Movie theaters, the old annoyance was when somebody's cell phone would buzz. The new annoyance is when someone's coughs, right?
Yeah. If someone coughs, it's a stampede out the door at this point. No.
Yeah.
Unclean.
It's true, even in public. Anybody that sneezes or coughs, you kind of do a double take there. There's no doubt about it. Back on the market here, guys. One major economic data point here today. Well, I wouldn't even call it major, quite frankly. The Labor Department released their weekly unemployment claims data, Matt. And we've been tracking unemployment and jobless numbers for quite a long time. First time since, I believe, March that they got under 1 million unemployment on a week.
Yeah, congratulations to the Labor Department for getting under a million initial claims. Here's the thing. for the last few weeks, both Mark and I have been pretty much in step with one another on the unimportance of this report. Would you not this report, but the labor numbers, correct?
Yeah.
Yes.
Okay, and that this report has been kind of the broader understanding of the labor market. And the question I guess I have today is, because the news is obviously positive, right? I mean, for the first time since March 19th, we're underneath 1 million initial claims. That's a positive thing. And I do trust that number. I trust that number. Even though everything's difficult economically right now, and I think everything is you got to give it a little bit of wiggle room on the economic data right now. But I do trust the initial claims number, and that is a positive for me that we did get underneath that million number. But the two questions I have for you guys is, number one, over the last 10 years, the standard of initial claims that we really kind of looked at is the bullish versus bearish, right? From an economic and a market perspective, is right there at about 200,000 initial claims. Even with the underneath 1 million level, you're still about 5 times the normal rate that we would consider bull versus bear. Moving forward in the future, where do you think the norm is going to be here? Because the norm's not 1 million. That's not the norm. But is the norm, are we going to get back to that 200,000 level, or do you think that new norm moving into the future is going to be a little higher than that?
Listen,
It'd take a long time. Go ahead, Mark.
Yeah, I think it's going to take a while. Listen, I'm always a guy, not always, but generally a guy that bet on the system, right? Even though I think the system's corrupt. So I guess my glass is half full when it comes to big picture. I mean, the biggest gripe I have with the market is like, okay, but it's not a certainty, and you want me to pay today for prices based on everything being good in 2022 or 2023, and we want to have that price appreciate. Now, I think it is a totally illogical, ridiculous argument, but the market's pulling it off. The plain and simple fact is, it is going to take us a long time. A lot of these layoffs are permanent. The Fed can print money, they can provide low interest rates, but it's not like companies didn't have access to cheap money before, right? It's not
they've
like
had access to cheap money for a decade.
Yeah, so it's not like, oh wow, like we're gonna go out and spend and reach you. No, Apple's gonna borrow more money so they can buy back stock.
Again, Apple doesn't even have to do that any longer because they just sell bonds to the Fed.
Mm-hmm.
And so it's the systematic problems in the system run really, really, really deep. And it's going to take a long time for us to get to a level of normalcy as we were accustomed to it in the labor and job market. I mean, that's just the reality. And anyone that argues with that, man, they're just blowing smoke.
Well, and regarding Apple, and this has nothing to do with anything other than just my personal belief, there is no fundamental economic or behavioral reason for the Fed to buy Apple bonds. All they're doing is creating monopolies, is all they're doing. And it does not help the national economy. So that's just a tidbit there. My second question, though, guys, was that when I saw underneath 1 million, I did take it as a positive, but the market didn't really react to it at all. I mean, you see this real tight movement here, and I'll take this look at a 5-minute chart here. When you saw that report right there at 6:30 my time, 8:30 Eastern, you saw an initial bounce only by about 6 points before in the next 30 minutes it gave it right back up. There was no movement on that initial claims report, even though we did get underneath that that I don't even want to say an important number, just a psychological number, right? Underneath 1 million initial claims for the first time since March 19th. Why did the market not care about this? There's no other news today.
I think we're already overstretched. Maybe the market's just kind of on sleepy back into the summer mode. I mean,
I get it, but you've been consolidating for basically 4 days.
Yeah, but if you look at the light range of the candles, I mean, this is a beautiful trend, right? But look at that ATR collapse there, Matt. Maybe we're just getting less action right now. I mean, we are in lighter news cycles. We're outside of earnings season. I think it might just be lighter participation.
Okay, then let me ask my final question then.
Little breakout on the intraday, by the way.
The lack, yeah, it is. It's hitting that 3381 number. Watch it fly. Let's see it. But does this signify, and I know I'm early on this one, I just want to get you guys' take on it. Does this signify the market getting back to some degree of normalcy and not overreacting to one or two data points on a daily or weekly basis?
I don't know. That's a good question. I mean, I wouldn't call this normal to still have 900,000 people.
No. I'm
filing
talking
employment
about the
claims.
market
Market
response.
response.
Oh, of
Okay.
course, a million initial claims. That goes without saying, right? My
Mhm.
11-year-old daughter could tell you that's not normal. So of course that's not normal. I'm talking about the market not overreacting. Like AMC is a complete overreaction to, oh, we're going to open up. That is a complete and overreaction. But the broad market is not overreacting to one data point of positivity or negative in the last week.
Mhm. Yeah, I don't think you can argue with it. It's hard to trust it, right? Deep in your instinct, it's like, well, yeah, maybe we're moving into a period of normal, but in 2020, you don't want to ever really fully trust that things are calming down and things are just going back to normal and back to business. But the data is there, Matt. I mean, the ATRs are down.
Well,
They're,
and
they're not seeing the crazy volatility that we had seen in the past. So it's a good question. Yeah.
we're back down in terms of the average weekly price movement in the market. You're back down to basically December pre-pandemic is what you're back down to. So you've seen the volatility subside quite dramatically. I mean, we're not talking a few percentage points here, guys. We're talking 140 points in the S&P on a weekly basis. You're talking about a massive decrease in volatility over the last 3, 4, 5 weeks. And
Mhm.
so does this represent, and I'm not talking, there's nothing normal about this market from a valuation perspective. That is not what I'm talking about.
Mhm.
I am simply talking about the speed of the market in reflection to the individual data points that we get in the market on a daily basis.
Mhm.
I'm just not seeing the same degree of economic catalyst that would drive the market, crazy one way or the other. I'm not seeing the market behave that way right now.
Mhm.
You
Yeah.
know, I think the market is separate. I mean, listen, we've been joking and not really that the market is separated from reality for a long time. I think the market's totally detached. I think it is trading on its own right now. I think it is just technicals. You don't have a ton of volume, right? You just don't. And I think in these low liquidity environments, the algorithmic trading just trade bounces and things, and every once in a while there's a little flash on the news wire that people use to jack something up, and then just technicals take over. So I think this thing is as close to a video game right now as I've ever seen the market.
Mhm.
It very much reminds me of 2017, reminds me of late 2019, where the market just got on this algorithmic grindy move. And that's what the market has felt like for a couple of weeks right now, just this algorithmic grindy move.
And think about this, Matt. In the last 2 weeks, these are some of the red impact economic reports, and we haven't got real moves on them. We had
No,
an FOMC statement that didn't really move the
nothing.
needle. We had an advanced GDP number that didn't move the needle. We had
Didn't touch
manufacturing
it.
data that didn't move the needle. We had terrible data out of Europe that they didn't care about.
Mm-mm.
We've had unemployment claims weekly that they didn't really care about. The monthly job number last month or last week that the market didn't really care about. Market's kind of just ignoring it and just trudging along in really kind of an orderly manner, if you think about it. I mean, you got to call a spade a spade.
Well, I mean, algos are very orderly, right? They buy, sell based on technicals on a variety of levels. I mean, you go back and look at those charts in 2017. You go back and look at the charts at the end of 2019. They are very grindy, and I use that in an affectionate term. They're just very grindy. Not a lot of like big
Resilient.
massive day. Yeah,
No,
resilient. It's just, and I think, and if that continues, and if nothing interrupts that, it was funny, and Matt, you make this complaint all the time. People love to like, oh my goodness, algos, sending markets down, and they complain and they
Yeah.
complain and they complain. Yeah, listen, you bulls, should be grateful algos exist, because
It's true.
if you had to rely on human beings not getting scared or being worried, yeah, this market would be up and down like
This
a yo-yo.
market's not at 33.78 today in the last 10 years if it's not for algorithms.
So, algos, yeah, sure, they get the
Well,
headlines on those.
Just be consistent, right? That's Tim, that's my philosophy. Be consistent. If you're going to sit there and complain about how algos stopped you out and made you lose some money, you got to give algos a little bit of credit for making you a ton of money over the last 10 years.
Tim, you need to accept that the robot overlords are the future, and you just need to buy that little mechanical dog right now.
I'm trying to figure out what I'm most afraid of now: elephants, robots, or clowns. I think for this week it is actually back on.
Hold
clowns.
on. I am deeply offended right now. How in the world would you put Marty into the same vein of thought as clowns?
Blame the Disney Corporation. I've said it before. I've explained this point. Those psychedelic.
Dumbo's the cutest little thing in the history of mankind.
Those elephant dancing.
How do you not cry when you watch Dumbo? You're not human.
They ripped my childhood. Yeah.
Oh, get out of here. I can't believe you mentioned elephants into the same.
The level of surrealness 220 has brought us. I mean, seriously, if you saw Dumbo flying, I mean, you'd be surprised, but you wouldn't be like shocked.
You'd be like 2020. Mark's going into the woods with clowns and elephants are flying.
There's a freaking flying elephant. I mean, I'd pull out a cigarette. I'd look up at the elephant. I'd be like, damn.
I'd be like, hey, Kat, did you see that? That is impressive. That is impressive.
I'm just disappointed that the murder hornets didn't get more news traction. I was excited to see where that.
We really tried to put the murder hornets. We tried.
Murder hornets got a good day or two, but
I'm not saying we. I'm talking about America. Like America tried to really make the murdering hornets a thing, but it didn't stick.
It didn't stick.
I kind of like the fact that volatility has subsided in these news cycles, guys. I really do like it. I mean, stop losses aren't going to be hunted nearly as much. You're going to see more consistency. This market is driven technically right now, no doubt about that. But I think you will see cleaner setups in a less volatile condition. Yeah, can you reasonably expect the euphoria take hold and the percentage gains that you had in April and May and June and so forth? No, but I love this market getting back to a more normal moving market. And again, I say normal is in its own box. Okay, right. This is a new norm, but I do like the decrease in volatility over the last little bit.
Hey, let me give you a nice segue to our next news section. The only reason murder hornets didn't get more traction is because Pelosi couldn't find a way to stick it on Trump.
That is true, and it does segue us into our next conversation. Daily conversation about stimulus.
Hey, real quick, Matt, Tim, someone click on that link I just dropped in the chat.
I don't know if I dare. Mark just made a Pelosi comment. Cody came in. It just makes me scared.
No, he's trolling me. It's a clown picture, and
it's a clown sitting on an elephant.
Yeah,
it's fantastic, Jim. It's fantastic.
That must be terrifying.
Is that the clown you're going to go into the woods with, Mark?
Listen, all I know is when I see that, all I see is Russell Crowe in that clown outfit saying, "Are you not entertained?"
Nicholas says, on Twitter posted yesterday, scientists say a zombie apocalypse is actually possible, and I was not shocked. There's nothing would shock me in 2020. Not one thing. Not one thing. Surprised? Yes. Shocked? No. 2020.
No, I re-downloaded a dating app recently, and one of the questions that was not there the last time I did was,
I knew that clown came from somewhere.
No, what is your plan for the zombie apocalypse?
That's a prompt.
That's a prompt, and my answer was world ends at 4:23 on Thursday. Meet at designated location. Bring extra nachos.
My plan's easy. I'm going down to Huntington, Utah, and getting in a bunker with my father-in-law.
Yeah,
he's got an army.
Emory County is my backup to my backup plan.
Listen, Emory County, Utah, Don't listen. I'm just telling you publicly, guys. Don't try to go to Emory County, Utah, in the zombie apocalypse. They will not let you in.
Small town from
You
the
gotta
country.
have blood from that type of country.
That's right. That's
You
right.
are different. Please move along.
Well, moving along here as well. Marky, what do we know from stimulus today? I just saw basically some rhetoric, some statements. Same
Well, I
kind
mean,
of
that's
thing.
what we have right
Yeah.
now. We have both hands pointing hands, but both sides are very much, hey, it's at a stalemate. There is not a hint of optimism other than the general, we would like to get this done before September. You know, the Hill reported a nice political, I enjoy articles out of the Hill, said COVID-19 relief is likely to drag into September as lawmakers have mostly fled to their home states. The next jobs report is weeks away, and the spotlight has shifted to the upcoming GOP and Democratic conventions. Mnuchin, everyone, Kudlow, all saying we'd like to make a deal, but no progress is being made. And Nancy Pelosi, when she was asked if a deal would be delayed until September, she said, I hope not, no, people will die. So like, and that's nice, Pelosi, that you care, at least in your words, about that. But the plain and simple fact is if this thing drags into September, man, I just have a hard time seeing a deal getting done mid-September. Not with the election at that point, 7 weeks away? Man, that's really close for the election. And for one side, unless they are like convinced it gives them political optics, you know, I think we got about a 3-week window right now to get a deal done.
Well,
And every day that passes, I worry a little bit more.
Both parties are putting themselves in front of the country.
Yeah.
And that's why they have.
I mean, is it going to take a stock market crash to get the sides to move?
Well, I don't foresee that stock market crash. So I don't know. I thought for a long time a deal was to be had. I thought the parameters were there to meet in the middle. I stated at the time that if I was advising the Democrats, I would play a little bit of hardball, and the Democrats are playing a little bit of hardball, no doubt about that. But to me, a deal should have got done, right? I think you did have the parameters to get a deal done. And quite frankly, I think both the Democrats and Republicans are putting politics in front of people, and I think we should all hate on them for it.
Yeah.
For people that are like, oh, it's the Democrats' fault, or it's the Republicans' fault, you're just playing into that party bullshit. That, in my opinion, that's what's happening. Both parties are disgusting right now. They're putting party politics in front of the people.
Mm-hmm.
Where is this generation's Ross Perot? And I'm not talking about his politics. I'm talking about a third party that genuinely excites America.
Well, he owns the Dallas Mavericks, to answer your question. It's probably your Mark Cuban at some point if he did want to go into that avenue. I'm a big fan. I think he could be a third party independent voice, but we don't get
sounds reasonable, actually.
You guys think we're actually moving to a third party? Are you kidding me?
Listen, I'm just saying
America's so ingrained in their political party nonsense that they can't see the other side of the equation. There's no way. We're closer. We are now closer to a standard two-party system than we ever have.
Yeah, and I'm getting tired of reading Mnuchin.
Americans crow for a third party for some type of, come together, but then all we ever do is just point the fingers at one side or the other, and it forces us to dig into our own arguments even more. So no, we're not. There's not going to be a third party Canada. Are you kidding me? Both parties will just no, it's not going to happen.
They're continuing to do that, and I'm getting pretty tired of reading these headlines from Mnuchin and Pelosi and all of them, quite frankly, just back and forth and no progress at all.
It's honestly like they're a bunch of kids on Twitter just pointing the finger at one another.
Yeah.
No, it's your fault. No, it's your fault. No, it's your fault. No, act like a grown ass adult and go get a deal done.
Yeah. Yeah, I do believe, Mark, you're right, though. The further this goes on, the less likelihood of something happening. So we'll see. We'll see if something happens in the short term. Next one, let's move on to crude oil if we can here, Matt. There was a report out of the IEA overnight talking a little bit about global oil demand. I think you told me, what are they forecasting, Matt? A 500,000 draw barrel per day on demand.
The IEA, which is the International Energy Agency, they came out and they lowered their forecast for global demand on oil on a daily basis. Now, what their expectation was 95.75 million barrels a day. they simply lowered that global consumption daily rate to 92.25. So they reduced it by 500,000 barrels. And the question I asked Mark when we were talking earlier today was, Mark, is this surprising, shocking, anything? And Mark's like, no, it's par for the course, right? Mark, any other thoughts to add on this? Because this is a nothing burger for me.
No, I mean, the plain and simple fact with oil, we have a lot of visibility in oil right now. We probably have more visibility in oil than we've ever had. You have fewer numbers, makes it easier to calculate supply and demand. It's pretty much a wash right now. Still, as we have for a couple of weeks as a team, I don't know where Tim is, because Tim, his relationship with oil is
it's
tenuous.
complicated.
It is.
If it was on the relationship status on Facebook would be as complicated.
That's right.
But you know, lean, bullish cash flow environment.
Yeah, I'm waiting, Mark, is where I am, just like everybody else. I see the consolidation. I see it stuck in the mud. I'm very much worried about the global economy. Matt, you know, think about the economic data that grabbed your attention the most over the last week. Terrible report in Europe, Germany, Great Britain. I mean, so oil being that international commodity does require a global demand, Mark. I'm still cautious and concerned, but if it breaks out, you got to call it a breakout and bullish and tradable. So I'm with you guys. I don't see much there in the chart besides that.
No, it's like I said yesterday, the longer this consolidates, the more that breakout is legit. I'm still not going to, as of right now, I'm still not looking at that potential breakout unless you do see a close. I still think the retest of wherever that support level is, when it does, it would be the better trade on oil. But like I said yesterday, and I'll say today, I wouldn't fault to anybody for trading a breakout here.
Yeah, I agree. Gold, silver, and let's move into the metals here, Matt. Silver's making a nice little move here today, about 5%. Gold's up about 0.75%. Came off that big red candle.
Maybe we should just overreact to every red candle like everybody else does.
No, I don't think
maybe we should start doing that at Tackle Trade and see if we can get more hits.
No,
Just make radical statements every single day, change our philosophy every single day. Maybe we should just start doing that.
I mean, here is the thing about having fundamental conviction, you know, and plus, before that, the technical, that's a first test off the rising 20-day moving average. Like from a back testing standpoint, a first test of a rising 20-day moving average has been pretty good. Test off the 20 moving average in this market in all conditions have been amazing. It was. But the fundamentals, like when you have fundamental conviction about something, and it makes trading so much easier. It just does. I mean, I sold a naked put on Tuesday, you know, why? Because I wanted to own some freaking silver. Now, do I wish I would have just bought? Sure. In hindsight, you always know what the correct answer was. But, you know, it's just like when you believe in something, man, it makes it a lot easier to pull the trigger.
Yeah, no, I agree 100%.
Now, I wish, man, can we, like, do you ever like fantasize about like, man, if I could have a time machine to go back 5 months, what I could have done with perfect knowledge of the future?
No, I don't play that game. Reason's very simple. You got to focus on making decisions at the moment. It does nobody any good to say what is and could is and should have. Learn from it.
Yeah, well, I'm a lot lonelier at night than you are. So, you know, you got a man got to fantasize. Listen,
when you said do you ever fantasize,
I held my
really
breath.
Scared. I was like, do we just shut off the power and just pretend it was a technological problem here?
Yeah, so hey, listen, I am 99.9% in control of my words on the halftime report. So, but I get the fear for
neither one of us believe that. And I wasn't talking about Tim. I was talking about you. You don't believe that.
It sounds good though, right?
Sure.
It does sound good.
Nice move out of silver here. Not quite as big of a move out of gold, but still kind of same pattern now that they're developing. Matt, anything in those charts that you want to update the team on? Anything you're seeing that grabs your attention?
No, it's not. I just think people should be reminded that don't overreact when the market overreacts, and don't get your financial advice from Twitter.
What was like? I don't even know what Twitter was saying. What was
Oh
Twitter
no,
saying?
Mark. When silver was down 15%, all the haters came out. I told you this is crazy, and then it's gonna go. And then when it starts going back up, it's like, oh yeah, this is great buy. It's just it lacks
Oh,
all consistency. That's it.
price
There
chasers.
is there is zero conviction in social media, like there's no loyalty at all. So no, silver. I think it was a tough trade to catch on silver, unless you were focusing on intraday analysis, or if you were still already in. I don't think a lot of people were in. I think they probably got shaken out with the volatility on Tuesday of this week. I think a lot of people are waiting for a re-entry. That trigger above to yesterday's high was kind of that trigger. I don't think you chase it here. You got to wait though.
No, you had to catch the high. And in fact,
You got to catch the high.
For commodity report readers, I talked about this specific pattern in the report this last Saturday. A pullback to a moving average, getting in like 10% of the ATR above the previous
Above the
day's
high.
high, and then but that thing is hours old.
Well,
now.
that 10% of the ATR above the previous day's high, that is for step system members, that is step system protocol.
Yeah,
I mean,
and all you're doing is using a pullback to the moving average as the base pullback pattern. And obviously this one is extreme because the whole move down happened in one day, but the principle remains the same on that pullback to the moving average.
It's hard to do it, but some of these one-day movements, historically, this would be your 3, 4, 5-day retracement down into support, right? But when you start going parabolic, and I want to be very clear, I hate the volatility in the precious metals right now.
Yes, absolutely.
I absolutely hate it. I hate the fact that Robinhood is all over it. I hate the fact that people are treating gold as a tech stock and silver as whatever higher than a tech stock is. I think last on Tuesday probably shook some of those people out of it, and I'm actually fairly excited for that.
But the one thing this market is doing though, and because people get shook out, this market has made me tougher than ever. Because I think one of the biggest problems I've had over my trading career is that sometimes I get a little skittish.
Yeah.
These days I can take a one-day punch pretty good, and developing that, as long as it's based on, you have a technical out and all that, man, you cannot just get scared when price moves against you, man. That you got to have a plan and stick to that plan. And so,
I mean, as gold was getting overextended in the short term, what did people think? It was just always going to go up?
Go straight to 3,000, 10,000.
Silver was getting overextended. Was it just always going to go up?
Yeah.
There wasn't going to be any type of movement to the downside. There was going to be no profit taking. No, I hope they do get shaken out of the commodity market. It allows more for us.
Yeah, I'm with you there as well. Obviously,
it will be nice though when silver and gold get back to that grindy pattern.
I get it.
I would love them
all
to
the gold
consolidate.
haters.
I own, by the way, and I wouldn't mind a consolidation. So
no, me as well, Tim. But it is really impressive that the gold haters and the dollar whores can come out there and hate on gold and silver because it goes down one day. But then where are they crowing at today? Where there's mouse today?
Yeah. No, that's just FinTwit.
Here, I'll tell you.
They're so sensationalized. I mean, it's just
it's really simple to me. It's really simple to me, and I'll say this until the cows come home. Would you rather own UUP, which is your currency, or would you rather own GLD, which is gold? One is a paper philosophy built on faith. The other one is a physical commodity that's acted as a currency and a storage of value for 6,000 years. I like the historical evidence.
Yeah. And those charts are just stunning, by the way. Just a 1-year chart, and you saw the downtrend on UUP and the uptrend on gold. By the way, with our
keep hating, dollar horse. Keep hating.
Right. with our event yesterday, we didn't really properly pitch our podcast. I know people are probably listeners out there of Team Tackle. Go on to the dollar if you can. And by the way, we've finished our second part of a 3-part series where we review the history of currency, Matt. I thoroughly enjoyed the conversation we had on Tuesday. Podcast did drop on Tuesday. I'm sure a lot of Team Tackle have already listened to it. Dollar is still kind of in a downtrend and all that kind of stuff. Any thoughts on the dollar currencies or anything right now, Matt? There's not much in those charts today.
No, the podcast should lay out whatever my thoughts are on the dollar.
You
Go
mean
listen.
you don't want to discuss your thoughts for 45 minutes in the halftime report at 1:25 Eastern?
No, listen to the podcast.
Absolutely. Listen to both those first 2 parts of the podcast.
You know, the one nice thing about the podcast the last couple of weeks is that you should make a note, even if you don't have time to listen right now. Like what the main segment in which Matt went over the last couple of weeks will be applicable today, 6 months from now, 6 years from now, if you need a refresher on the topic to understand the topic.
Yeah.
So I like timeless material. I like timeless material. There's some nice timeless stuff that you should reference on the history of currency.
No, I'm with you as well. I'm looking forward to our conversation on Monday. Let's move on to individual company news here today. We've got some upgrades, downgrades, a couple earnings reports that I did want to get into. Matty, you want to start with the news companies, or you want to start with earnings?
Let's go through. There's only 2 earnings, Tim.
Yeah.
Let's just kind of hit the 2 earnings. The first earnings, the more important earnings today was Cisco, but I do want to start with Lyft because they have been in the news recently. Lyft comes in and reports $1.41 negative earnings per share, so they lost $1.41. They were expected to lose $1.58. Revenue came in light at $339 million versus the expectation of $431 million, and revenue declined year over year, quarter to quarter by 60.9%. My take is very simple. It could have been a lot worse.
Mm-hmm. Yeah.
That does not mean buy.
No, that's an ugly
been
chart.
A lot worse.
Post earnings, we've got concerns. We've talked about the regulatory concerns out of California and whatnot in this industry recently. Now you're post earnings, Matt, in a, I don't know, consolidation maybe there for the couple weeks, but really long-term pressure, long-term problems. I mean, could you be interested in a bear side play on Lyft here at some point? Let's say, moves sideways, gives me a low base breakdown, something like that.
It's 2020. That's such a cute question.
You don't short anything, Marky, ever?
It's adorable. That is just, oh my goodness. I just want to pinch your cheeks. It's so cute.
So that's a
one
no.
day. Listen,
I think that was a no.
Is that a no? You guys aren't looking at the short side of
No. Don't put me into the anti-short category that you just labeled Mark as.
Listen, I am anti-short until I see some stocks, just a few, separate out from this endless rotation that
Mark,
we
you've
see.
been anti-short since like December of 2005.
Listen, I am a true Fed apologist. What can I say, right?
Mm-hmm.
Listen, Jay Powell doesn't support any of this conversation. Let's move along.
Well, pretty disappointing earnings, obviously, Matt.
Lyft's a dumpster fire right now between the regulation in California, to changing consumer habits, to COVID-19 outbreaks, to the fact that even before all of this, you had zero idea when they could ever make money. I mean, the
that
problem
should tell you a lot about the market conditions. A man who has that perspective on the company, and I ask him about a short idea, and he's like, "That's the cutest thing I ever heard in my life."
But
they're a dumpster fire fundamentally. It's a terrible
Lyft in the next 6 months
earnings
could trade anywhere between $22 and $70. I have zero idea.
I get it, but I do agree that shorts under support have been not a winning trading philosophy, but we're also talking about Lyft, who is down 25% in the last 2 months. So I don't think we can just poo-poo shorts out there since Lyft is down 22%.
I think you have to. I think the best shorts have been on counter trend.
I think the best shorts are off reversal patterns right now and not after continuation on dumpster fires. I would agree with that. Yes. But I don't think we should just be anti-short. We should be traders. We should be assassins. We don't have a horse in the race, right? We're all bullish right now because the market is bullish. But if you're a real trader, you're willing to short just the same way you're willing to buy. You got to follow the price action. And right now, shorts underneath the lows in depressed areas of the market have not been a winning philosophy. And I think that's what Mark is talking about. But shorts off of reversal patterns, off high flyers, that I still think those are the ones I'm looking at. I'm looking at more high flyer reversal patterns than I am.
The Peloton Zoom pattern, I think, is the best short pattern right now. Those reversal type classic patterns, I think those. And this is a nice bearish rally back into old support, hold, falling moving average. That's
Zoom
a nice.
And you never know. Technically, they got to confirm, right? I mean, technically, but if you see a doji at like say 250, right in that cluster of the 50 and the 20 and the 9, followed by downward movement in price,
that's a good short. That's a
good
classic.
Short. Yeah,
it's a classic thing
there. I would be much more willing on that on a company I like on Zoom than I would say Lyft. I mean, I could 100 stop losses get destroyed on those. Just get destroyed because you get that 1 or 2 day random economy opening up, vaccine, and it has nothing to do with the company you're shorting, but all of a sudden just the entire bottom of the market is lifted up.
Yeah, we saw that on like Live Nation here this week. That you had that theme on Monday. Live Nation was setting up for a potential short, and then boom, it popped up with the rest of those type of stocks. So yeah, I'm with you.
Well,
guys.
yeah, because they're going to be at AMC's movie theater as well.
Are they going to launch the concerts there?
They're going to have concert there with AMC at the movie theater.
Get Smash
maybe Live Nation could be literally improve on their negative earnings report of 97.7% reduction in overall revenues. Maybe they could improve on that.
Yeah, I wonder what bands are willing to get out there first. I saw Smash Mouth was playing at Sturgis, and I'm just like, do bikers really like Smash Mouth? Like they're singing the Shrek theme song.
I saw some videos. I think they do.
That doesn't seem like a marriage made in.
Dude, Smash Mouth's in the 90s popular, right?
I guess. They had like 2 songs that I can remember. Moving on.
I was going to say they had 2 songs, Walking on the Sun.
Maybe Smash Mouth's the only band that would actually go. I don't know. We don't know these things.
Cisco next, Maddie. Another earnings company.
Cisco next. CSCO here, CSCO reports earnings of 80 cents a share versus expectation of 74 cents a share. Revenue came in line basically at $12.2 billion versus the expectation of $12.1 billion. So why is Cisco down so much? I mean, the report was lukewarm in terms of the overall numbers, lowered guidance. Not a good thing for Cisco, lowered guidance.
Why not just pull the guidance? Everybody else is doing it.
That's what they should have done. They wouldn't be down 11% today.
Yeah.
All they had to do, Cisco, all you had to do is be like, in this unforeseen situation and with all the variables that represent the future of our company, we really believe that the fourth quarter is going to be better than the third quarter, and the third quarter is going to be better than the second quarter, and the first quarter of 2021 is going to be really, 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 really good, even surpassing what our expectation in the fourth quarter. But because of the economic reality of the situation, we just cannot give forward guidance here, and the market's up 10% instead of down 11%. Cisco should hire me. Come on. Get it on.
I mean, that's the thing, though. I mean, when the market gets a dose of reality, it's like, we got to do. I mean, as long as they can be in suspended animation, buy. Cisco has the audacity also of being one of those boring stocks.
Yeah.
Kind of one of those dividend tech plays that pays a reasonable yield.
Intel.
And so, listen, I mean, the hilarity to me on Cisco, because you know who Cisco is. Yes, bad forward guidance. Guess what? If Apple gave guidance, it would be bad forward guidance. Like I don't know. I see as an opportunity eventually. I like Cisco as a company. I know who they are. They pay a little bit of a dividend. I know boring stock, not a high flyer. But man, if this sell-off, I mean, this is not I guess my main point is this is not an Intel report where Intel went down because they were having potential market share losing problems.
They were having delays on major
delays on their nano chip.
Right.
Like their 7mm.
That's a big difference.
Huge difference. So
lowering of the guidance. You know, Mark, as a value investor, I think you got to be looking at Cisco at the lows at some point.
Like, you know, yeah, no, I've been looking at Cisco's chart all morning to try to find that level that I feel comfortable with. You are bouncing off the 200 weekly grandmama right now. If I can get a bottoming pattern for a week here,
you got some pretty good historical support levels between 40 and 42, Chucky. I wouldn't touch it under 40. If it's under 40, you're talking down at 32 at that point. So, I mean, if you're thinking deep value here, Mark, and you can get a naked put at say 33, 34, that might make some sense, especially given the volatility today. In a normal condition, you wouldn't be able to do that. But I don't know, if you're looking to own it, I wouldn't want to own it under 40 unless you get that deep correction.
The problem is even at 34 in September, you get a nickel, you know, so it's like,
no, you have to wait for a more significant.
Well, Cisco's not AMD,
Yeah.
right?
Yeah.
I mean, just doesn't move like that, even on a big move.
I think the best play on Cisco is not wait for not sell a naked put, because it's just, you don't get it's too much margin.
Just wait for the pattern.
Wait for the pattern.
Wait for the pattern. That makes some sense.
All right, moving on to the next one here. A couple quick ones, Matt. Penn National Gaming, and we have some upgrade downgrades. I did want to.
Oh, you want to do upgrade downgrade?
You know, I got a couple of the news stories, but really not that important. I can hit them at the end. Why don't we do upgrade downgrade and start with this Penn National Gaming one? Matt, this is a game actually you kind of started a couple months ago, probably, where we just kind of go through and then two analysts say, okay, do you agree or do you disagree, right? Is that the basic premise of what we're doing here?
Basically, yeah, it's agree or disagree on the upgrade, right? So Penn National Gaming, who is one of those companies that is now in the social contrast, especially in the casino, the gambling space, right there. We're kind of with DraftKings and whatnot. Was it Goldman or JP?
Goldman Sachs.
It was Goldman.
Yep.
Goldman initiated Penn National Gaming, initiated coverage on Penn National Gaming. Goldman also, I believe, gave a price target, and correct me if I'm wrong, I'm going off the top of my head. I just read the article very quickly, but at $60, I believe. Okay, so their price target was $60, and they initiated rating as a buy. Let's start with Mark. Mark, agree, disagree with Goldman not upgrading, they didn't upgrade, initiating Penn National Gaming as a buy?
I have sold 5 naked puts in the last 2 months on Penn National Gaming in the mid to high 20s.
Yeah.
So I obviously have interest in the company. Dave Portnoy, 8 out of 10 days bugged me, but the other 2 days I see why he is the only face to sports betting that anybody could name. Like, listen, we all know him from stock trading, but
he's a charismatic guy.
His future, they're not buying him because he's going to lead the next day trading revolution.
No, his future is gambling.
And he is the only known face to sports betting. That obviously carries with it a market multiple.
Widely speculating. I'm just speculating here. I have zero clue. But do you think some of his evolution into the stock market is a little bit to influence Penn?
I think I don't know if Dave thinks what he's going to do at 3 o'clock in the afternoon.
Can we at least agree that his influence in the stock market has certainly garnered more attention on Penn National Gaming?
Without a doubt, Penn National Gaming would be at 12
nobody
today.
even talked about Penn National Gaming. It was not even on the radar before the last 4
First of all, Penn National Gaming owns some casinos. That's nice. The only thing Penn National Gaming is Dave Portnoy. You are effectively trading Dave Portnoy. And so I have sold some puts in the 20s. I do not like the elevated price into a COVID situation where I think you're going to have some sell-offs and get a better price.
So you think it's so you disagree with Goldman? It's not a buy rating right now for you.
No, but it is a buy rating in the low 30s for me.
Gotcha.
And again, don't be surprised. Listen, sports headlines have been plentiful. Pac-12 cancels this and that. Like, you can get a blow off the top 11% down day and start getting attractive puts on Penn
Well,
as early
that's
as
the thing,
tomorrow.
though, Mark. I mean, there has not been good news for sports in the last week, especially with like college football. But Penn National Gaming really hasn't been sold off here.
No.
And shocking news of the day: Mark hates breakouts.
Well, I mean, and this is the
Right,
thing.
Mark wants cheaper prices.
I
Yeah,
really want in
shocking
this
news
pace.
of the day.
I have sold probably combined between 12 and 15 naked puts on MGM, DraftKings, and Penn. I love the space. Long-term sports betting
Yeah.
it is one of the things that will help cure the state budgetary woes. I think you're going to see the floodgates open on legalized gambling in this country in the next 10, 15 years.
I agree.
You know, people love to bet. Hey, listen,
They do.
they love to bet. And Portnoy's position,
especially in negative economic times, they love to gamble.
Portnoy's positioned as the face, DraftKings is positioned as the brand, and I don't count out MGM because whenever you have a company that's been doing it a lot longer than the other two competitors, their Bet MGM app they're a dark horse to be the #1 betting app at some point. I want a little bit of all of them.
Yeah, Tim, we put out this list called Dirty Sexy Money, right? And Dirty Sexy Money is the list we put out there in conjunction with the Tackle 25 of companies that we're interested in long term, but don't yet have the fundamentals. So they're more of a growth stock with potential high return, but potential also high risk. But companies we just like, companies we believe in. I'd be really, really surprised if we don't have a DraftKings or a Penn on that list.
One of the casino stocks are going to make it.
One of the, but not Wynn, not MGM. Those are more known commodities, right? That's not what Dirty Sexy Money is. We don't put Apple on Dirty Sexy Money, for example. But what about Penn here, T? Mark doesn't like the elevated price. Shocking. He wants a crash before he gets his deep value that just fits his investing philosophy. What about you? Do you agree with Goldman here? Nice little high base coming into a potential breakout.
I agree, and I'll tell you why I agree. I agree with the logic behind why they initiated the buy rating. $60 price target. I don't really care what number they threw out there.
Oh, that was made up.
I mean, they'll raise the price target. So, forget that part of it. Just focus on the part where they just said buy rating. And there was a quote they actually put out there. We believe Barstool Sports' embedded customer base and content creation engine will drive one of the lowest customer acquisition costs in the sports betting industry. Matt, their cost per lead, right?
I 100% agree with that analysis.
I agree with that as well. And that's why Penn and Barstool Sports does make some sense.
Yeah, they've got a built-in marketing engine with Dave Portnoy. Right, wrong, indifferent, love him, hate him, don't care. He is an influencer. There's no question about it.
From Penn's perspective, it makes a lot of sense. From Portnoy's perspective, it makes a lot of sense, whether you agree or disagree with the individual. I don't like some of the things he does in the stock market. I don't like the influence he has in younger generations in the stock market, but I do like the fact that they are getting interested. So, but yeah, I mean, if I'm Penn National Gaming, that's a deal I'd make.
Yeah.
Guaranteed.
Yeah, I agree. Next one, and let me throw a couple of them at you guys, Matt. Here, let's bring up. Let's try FedEx here. FedEx, FDX, obviously the major shipper. Citigroup raised their price target to $235. Held the coverage as a buy. Just a big increase in price target. Do you agree? Disagree? Do you got to chase the price here?
I agree with raising the price target here. And I do agree with that. A 235 price target seems a little ambitious for a company like FedEx. And I know I'm talking about a stock that's went from post earnings 140 to 203. I get it. But historically, FedEx doesn't do that. I think the 220, I think if anybody in the scouting report meeting came and said, hey, let's put FedEx, which may be on the report this week, you're seeing some pretty good consolidation, high base type situation after some positive price movement we've seen in FedEx over the last week. So that could be something. It could be something some of the coaches are like, well, maybe next week, let that 9 EMA catch up to it. But I'm sure we're going to have a debate on it. But if we do put it through the scouting report meeting, the question is going to be where would that target? Could we justify a return versus risk ratio? I think Coach Frank on a breakout would say you're absolutely crazy for targeting 235. That's a pie in the sky type target. So I agree with the upgrade in price because I think you're chasing a little bit. But the 235 is too ambitious for me. I think a price target in the 220 would be far more realistic than 235.
Mark, 235 price target. You think it's reasonable? You
Listen,
agree with the upgrade?
I don't give, the Goldman can put whatever made up number they want. I love the short-term technical pattern. You know, I think a reasonable price target on a trade. I've liked the FedEx pattern for a few weeks now, as a lot of coaches have it. Zero interest from an investing. Do love the short-term trading potential.
Next one, Micron here, Matt, the chip maker, one of Mark's favorite companies. Going to be an interesting one to get his take. Mark, Deutsche Bank downgraded Micron from hold to sell, I believe. A little downgrade here. The stock is down here today. Matty, I'm going to start with you first. Do you agree with the Micron downgrade?
So no, I don't, but solely because it was Deutsche Bank.
Mark, you know this company well. Would you downgrade it? Actually, it was downgraded to hold from buy. I said sell from buy. No, it was hold to buy.
Okay,
to
so
hold.
it was just to a hold.
Yeah.
Yeah, Micron's underperforming its counterparts. It's underperforming its industry. It's underperforming its sector out there. You had just violated the 200-day moving average. After you tried to break out, you couldn't see any type of price appreciation. This feels like Micron to the downside. I actually wouldn't even have a buy rating. I'd have a sell rating on it.
Marky, what do you think? Would you hold Micron? I know that you've been concerned.
The thing you have to understand about Micron is in the commodity business, and the commodity they deal is in memory. And once you start thinking of Micron as oil or silver or whatever the commodity is you want to do, Micron makes so much more sense. Of course, Micron should be downgraded now because the economy looking forward is soft. Demand is going to be soft. And so whenever you have soft demand and fairly elevated prices, that warrants a downgrade. I thought it was a spot on downgrade. I think, it's between the Chinese risk and the softness of the commodity. Micron's a stay away until it gets to much lower prices, but it's an appropriate downgrade.
I don't know if I even want to ask this question, but Matt, do you ever wonder where Mark goes when he leaves his laptop and wanders the house?
I think we're going to have like a Leslie Nielsen moment from, have Mark you just all of a sudden just, in his bathroom talking about Micron while he does his business in there. I have no clue. I don't like to speculate on what Mark does when he's not on camera. It is not a thing my mind likes to go to. No.
Fair enough. Moving on. All right,
Des. Listen. I saw you chuckling before you asked the question, and all of a sudden, it's like, because I was thinking it too. I was like, where did he go? Like, he does at least once a day. Where did he go?
That's funny.
And I'm like, I don't want to know that. More than likely, he's like eating something right now, and that's why he's not talking.
Listen, multitasking is an art form.
No, it isn't. Everybody's bad at it. There's no art to it.
It's not. Next one here, Deere, Matt. Obviously, one of the iconic American brands, the tractor company, John Deere Green. JP Morgan downgraded the company to underweight from neutral. Now that stock is in a beautiful, beautiful uptrend. Probably just citing valuation. It's now a neutral rating at JP Morgan. Mark, I'm going to start with you first. Do you agree with that? Would you have downgraded Deere from underweight to underweight from neutral, which basically is a sell rating against the industry? So now
it's a sell rating against its sector.
Yeah. Mark,
listen. In this pump up of these other groups, listen, rising tide lifts all boats, and sometimes lifts boats way beyond where they need and should be in any resemblance of reality.
Scale's important here, though, guys. Always think about scale here, because we're not talking about Deere up 200%. The trend looks extremely bullish, but we're also talking about a stock that in a trend went up from 180 to 190.
Well, look at the weekly chart, Matt.
So,
the long-term chart.
I'm just saying it's not.
We just broke out of a 3-year range.
Completely overextended. Deere is not completely overextended.
Listen, the companies like Deere and Cat in this worldwide economic environment, there's no way. Listen, I would rather buy an overvalued, overpriced Microsoft $1 billion out of $1 billion times over.
Well, the game isn't by Microsoft or Deere. Everybody and their dog. Mark, you have a cat. Your cat would choose that. That does not take any degree of financial intelligence or intelligence in any capacity to choose Microsoft over Deere, but that's not the game. It's agree or disagree with the upgrade downgrade.
I disagree.
So
I agree. I agree with the downgrade.
okay, because it's downgrade against its sector.
Which means you're gonna.
It's not a downgrade against tech.
So, Mark, do you like cat more than deer?
Do you like cat more than deer, Mark?
No, I hate them both equally.
Okay.
Well,
do you like PCAR
you're
more
just
than
not.
deer?
You're just refusing to play the game.
He wants to downgrade the whole sector. He's like,
I do. I think the sector's ran way ahead of itself. So,
yeah. Matt, you agree? Disagree?
No, I disagree with the downgrading. Deer is not moving the same way the other stocks in the market are. Deer's been fairly consistent in its technicals in the last 2 months. I like it being overextended, coming back down into those moving averages. I think you're going to have a swing trade potential here on Deere, and I think if you give me another 2 days to the downside, I think you might have a really good swing trade. And unlike everybody going out there in short-term trading, high-flying, overvalued tech stocks, you got an industrial type stock that is being fairly consistent. And yeah, I get it. You're up 80 points off the lows, but if you take it in comparison to historically, this is the first week you've really seen a breakout of that all-time high. The industry has been setting up, the sector charts have been setting up. We've been upgrading the industrial sector. And so and I doubt we're going to downgrade the industrial sector in tomorrow's scatter report meeting. So, Deere's one of the leaders there. No, I would not downgrade Deere against its sector right now. No.
Mm-hmm.
Now, that doesn't mean I would put Deere industrials above technology, right? It is in comparison to its sector. And if you're not going to downgrade industrials, you can't downgrade Deere.
Mm-hmm. Mm-hmm. Yeah, and actually, as I looked at that long-term chart, I even kind of like that chart even more. Next one here, back on casinos for a second. Give me Caesars if you can, CZR. I think this is an interesting one. JP Morgan actually came out and reinstated the overweight category on Caesars, Mark, which basically means they like Caesars Casino more than other casinos across the sector. Mark, I'm going to start with you. I mean, casinos are something you've been targeting. I think we all, Matt, like you said, I think we're going to see a casino stock on the Tackle 25 Dirty Sexy Money stock list next year.
You'll probably have one on the actual Tackle 25 too.
Yeah.
You'll either have DraftKings or Penn on the Dirty Sexy Money list, and then you'll look at some of those traditional MGMs of the bunch that have a little bit better fundamentals, a little bit more time frame, more liquid options, pays dividends, those types of things would be on the Tackle 25. So I'd be a little surprised if we didn't have one or two gaming stocks on the casino stocks on our list for the Tackle 25 next year.
Mm-hmm. Marky, agree or disagree that Caesar is a better casino than its industry counterparts?
No, MGM is my favorite traditional casino, and it's not really close for me.
Mm-hmm. Maddie?
I personally like MGM more than I like Caesars as well. So I would put MGM there in front of Caesars. If you were to ask me on the Tackle 25, we were breaking down MGM versus Caesars, it would not be a long conversation. It would be a very, very short conversation.
Mm-hmm.
I would take MGM over Caesars.
No, I mean, the thing about MGM, there's some steam behind the MGM. Now, it got slapped down by the 200, right? But that's like as expected, right?
Plus you were overextended off of.
Yeah, overextended, slapped down by the 200. I mean, that's
obvious.
That's where our knowledge of technical analysis comes in. But there is some real heat building behind MGM.
I think you should start looking at it now, Mark.
No, I absolutely. What's the company that just took a 12% stake? I can't remember off the top of my head. Some big company took a 12% stake in it. There's some heat in it. The sports betting is hot. Their BetMGM app, while a low market share, is part of the reasons it's separating a little bit from. I think you could have a rising 9 consolidation, support level form, and then I think there's upward movement potential here.
Mark, agree or disagree with this? and I'm talking buy shares. I'm not talking selling naked put standard here. I'm just saying buy shares. If we consolidation, then break out of the 200-day moving average. Is that a equity type position for you?
Yes, it is.
Okay. No consolidation, 2 more down days, $20 price target, 90 MA catches up to it, confirmation bounce.
Yes, it is.
Okay, those are the two setups I'm
I
looking at.
worry with MGM because whenever, like, everyone knows I like to sell naked puts, get the best thing, blah, blah, blah. There's sometimes points reach on a stock where you're like, oh, crap, this might be my last chance to get in.
Mm-hmm.
And that's what MGM is starting to feel like.
Yeah, you don't always get a deep pullback. You got to play
Yeah,
the
and
prices
so,
at
like,
play. So Matt, if that retracement happens, great. If the breakout happens, you got to play that.
So I think with MGM, and then if it fails and it goes lower, I can cost average down, add more shares lower, right? So, but I think owning some shares, certainly from a trading point of view, but I think MGM is starting to set up from a sentiment point of view, from a momentum point of view, that the next good trading signal you get might be the last chance you get to get MGM cheap.
Mm-hmm. Mm-hmm. Last one here. I want to.
By the way,
yep.
MGM is a wonderful covered call stock too.
Yeah, the liquidity
It
is
is
great.
a wonderful.
Listen, volatility on MGM remains high.
Oh, don't expect to get 5% non-margin, ROIs on MGM, but that's what you're getting right now.
Mm-hmm. Mm-hmm. Yeah, it's pretty impressive. Even looking at the spread there, only 4 cents between the bid and the ask.
4 cents, 40 delta. If you were to tell me 6 months ago you could get, 5% on MGM, I'd be like, no way. The amount of things that would have to happen. I mean, we'd have to be going through like this economic calamity and a world like the zombie apocalypse is coming. Oh wait, yeah, that's 2020. But so you can't expect to get that always. I mean, MGM is not one of those types of companies that has routinely 71.64% IV ranking on the 36-day contract. But it's just, if you are looking at this space, you don't want to do covered calls on Penn or DraftKings. That's not what those companies are. MGM is in a different part of the evolution of the company. It's a wonderful covered call stock.
Mm-hmm. Mm-hmm. Last one for me here, Matt. Walmart, if you can. Stevens actually raised its price target on Walmart to $160. Now you've got an interesting pattern developing there.
Well, that 160 is just pulled out of somebody's behind, because that is insane.
Mm-hmm.
I mean, 160, a $24 price upgrade on Walmart?
It's silly to me.
Oh man,
this doesn't feel like the kind of personality of this company. I mean, Mark, would you be upgrading?
Phil,
yeah.
How many decades do you need?
It's not Walmart. So yes, no. I mean, Walmart is not an aggressive.
What's the time horizon? 2025?
12 months usually on these price targets.
Wait, I missed the price target. Jack,
160 on Walmart.
Well, dude, these people don't ever adhere to technical analysis. They just make up numbers and be like, "Hey, sounds good." So,
so you both disagree with this one?
Dude, I have agreed.
It makes no sense.
Every analyst, listen, all these people do is make up numbers and then they come up with something clever or smart to say to try to justify it.
Yeah, and they keep jacking them up there. This one doesn't make sense.
I didn't see the Walmart news today. What was it? I'm sure. Let me guess. And I have not seen Walmart news today. Something competing with Amazon.
Dude, they've had an unsuccessful rollout of their delivery service. I mean, even that deal with Instacart the other day, there was no news today. They had the Instacart deal. I think it was either.
Well, I was talking about the what was the analyst?
They did not cite any reason why. They just said Walmart up at 160. They just raised the price target. So they didn't give
like Bitcoin at 500,000. Let's do it.
Just jack them up right in front of earnings on a company.
I would honestly, I would like to have an honest conversation with some of these analysts and where do they get their price targets? Because I see some of these price targets and I'm looking at it from a fundamental or a technical perspective. I'm like, that makes no sense.
I don't see it. Only one more for me. It's not an upgrade, downgrade, just a bit of news here. Actually, a couple ones. American Airlines, you're going to see more stories like this. They are going to be canceling 24 flights into smaller cities. Obviously, air traffic is down. We all know that. This reopening theme, many of these companies still very much struggling. They've got to cut cost. And then another one, we've been seeing this one a lot from SPG lately, Matt.
I never mind. Go.
Go ahead.
No. You're fine. Just continue. I have no interest talking about American Airlines or.
No, me neither. Just given the highlight. And then SPG, actually, we've been seeing this company trying to make moves lately. you know, and they're in the news quite a bit. They actually are looking to buy J.C. Penney, who's been under pressure.
We need to stop talking about Simon Property Group. And
I
all their
seriously,
creative
I was
ways
thinking,
that
I was trying to find something really funny and clever, but I appreciate Matt's hammer approach.
These mall
Malls-
acquisitions are not grabbing you guys'
Malls
attention,
suck,
making
dude.
you
Are
want to
you
dive into
talking to me? They're
to
talking about buying
retail.
J.C. Penney. No, I'm out. Like,
Yeah.
come on.
Dude, the
The
only
Simon
thing-
Property Group is trying to find a reason to stay relevant in the news, and we keep talking about them, but there's no reason they're relevant in the news.
Yeah. Yeah.
Listen, the only thing good about malls is Kevin Smith and Mallrats.
That's
you
true.
know.
That's true.
An
I haven't seen the
underrated
movie
comedy.
I haven't seen the movie in 20 years. I don't know if it holds up.
I bet you it does.
Oh,
I
no,
love
no,
that
no,
movie.
blasphemy,
I'm the
blasphemy.
biggest.
Get outta
I'm a
here with
bigger
that.
fan
Get
of that movie than either of you. I
Out
know
of
it.
everybody in the world that would make that comment, you were the last person I thought would make that
No, I
comment.
just
wow.
have. I'm giving you an
Movie.
honest statement. I haven't
Oh,
seen
get
it. I
out of
don't
here. What
know
are you
if it
going to
holds
say
up.
now? Clerks is bad?
No, listen, no, dude. Kevin Smith is a genius. His movies, I don't care if it's Dogma or Clerks or Mallrats.
Dogma's my favorite. I love Dogma.
Like, you know,
they're all good.
No, Jay
Ben
is
Affleck
silent.
in Mallrats, Ben Affleck?
No,
the
I
douchey
remember the
character?
movie.
Really? What
Just-
is wrong with you? Like Randy?
Sometimes-
Have you seen My Name is Earl? Randy? What
Yep,
about
I have.
Randy staring at the picture and he can't see it? Oh,
It's a
come
schooner.
on.
It's a schooner. It's not a sailboat. That's exactly. No, I love Kevin
Ahmad,
Smith.
okay, but how are we supposed to react when Tim makes over the top statements like Mallrats doesn't hold up?
Listen, I'm telling you right now, much of the stuff from our childhood doesn't hold up. We just have nostalgia for it. I was listening to some hair metal from the 80s, and the lyrics are terrible on so
You're
many
right.
of those
I've been
songs.
listening to so many 80s music lately, and I love it.
I love a lot of it too, dude. It doesn't mean you have to defend it just because you liked it 25 years ago, though. You have to be willing to let some of them go.
Your liberalism has no bounds.
It's true. All right, guys, that's all I got from the news today.
I just don't know a movie that says "Why buy the cow when you can get the sex for free" by Brody. How you think that movie does not hold up over time?
I haven't seen it.
So-
Have you guys seen it recently? Are you just
I don't
operating
need to
on
see
memory?
it.
See, you're operating on memory from 23 years ago.
See,
So
this is the
that's my
problem.
point.
Now he thinks he has an argument.
I
He got
do.
excited. Let
I
him get
do.
excited.
You haven't seen it in
Let's
20
let
years.
him have his moment right now.
Yeah.
Another
Because-
Brody quote: "Hell
Go-
hath no fury like a woman scorned for Sega."
Yeah.
I mean, like, I'm sorry, dude. You need to go watch
You're out,
it.
bro.
No, I don't
You
think
need to
I'm
go
wrong.
watch it again.
I got to see it. I'm not saying it doesn't hold up. I just haven't seen it.
Mm.
All right, let's get final thoughts here,
What about
guys.
now? Jay and Silent Bob's just dead. Like
No, that's his best movie, by the way. Jay and Silent Bob Strike Back is his best movie.
it's. I love that movie too.
When
Yeah.
Kevin
Jay-
Smith
I-
in the '90s was amazing.
I literally lost my whatever. I one of the funniest lines in any movie ever, because I didn't see it coming, was just like they were explaining. It was Ben Affleck, right? Explaining like how people say bad things online to Jay and Silent Bob
Mhm.
on the
Yeah.
internet, and Jay looks at him and says, "What the f is the internet?"
And then he goes and he beats up that little kid.
Have you guys seen a picture of Kevin Smith lately?
I have not.
I'm not in the mood to listen to you rag on anything about anybody right
No,
now.
he's lost half of.
He looks
Kevin.
good. He's got.
Yeah.
He must have the lap belt. so.
Kevin Smith, I love Kevin. He has made
I'm a fan of
Kevin Smith has made my world better through his things. We should all pass it along like Kevin Smith.
Well, and frankly,
Oh,
the
him
Clerk
over
story.
into the comment section. Could you imagine what that movie would be in 2020? Could you imagine
Jay reading
Because-
Twitter.
Jay reading? No, not Twitter. The comment section under a popular post. Oh man, it would be so funny.
It's hilarious, actually. Yeah. All right, maybe they need to reboot it. Let's get final thoughts from everybody, boys. We've hit most of the news here today. Kind of a light day in the market. Let's start with you, Marky. What's on your mind? What do you want to communicate with the team?
I mean, this market has a theme. It's this rotation. But we can't ignore technicals, right? I mean, the S&P is approaching that resistance level, and I know I know smash the buy button and nothing works, and I fully expect to hit an all-time high, but I also expect there to be a hesitancy at all-time highs, because of just technical. That's what happens, right? You come up against known resistance level, market takes a few days. So I wouldn't be surprised if we see some little hesitancy in the S&P 500 the next few days.
Maddie?
Oh, I'm still on why you hate Kevin Smith.
I don't
understand.
Don't
I don't understand
misquote
it.
me. Yeah.
Oh, no. Don't you go radical and then try to pull it back.
No, listen, the statement was very simple. It's not a debate. I said, I don't know if it
I know
holds
exactly
up.
why you asked.
I haven't seen it in 20 years.
You act like me and
and
Mark
you haven't
don't
seen
know
it in
that
20 years.
See,
you don't know if it's held up either.
You're playing to the crowd here. Me and Mark know your dirty little tricks. We know
you
exactly
cannot
what you
say
tried
you
to
know.
do.
Nope. Not
I
at
am
all.
saying right now it holds up, and I'm going to watch.
Dude.
I'm going on a Kevin Smith bandwagon.
You
Like
do it.
I am watching them all today. I got a lot of research today to do, so I'm going to sit there. I'm putting Kevin Smith on. I am going through the entire catalog, and I'm going to enjoy it.
Start with
like,
Clerks.
and I, listen. However, the film may or may not hold up, there is zero chance that Brody, played by Jason Lee, an underrated comedic actor. Like I love Jason.
My Name is Earl is hilarious.
Like Jason Lee is just downright
He's a
hilarious,
genius.
and
He's
his
a
Brody
genius.
character in Mallrats, there is zero chance. That character was brilliant and will make you laugh in 2020.
My guess is when you rewatch it, you'll realize Ben Affleck ruins the movie. So.
Oh, listen, let's just end this now.
See, Ahmed's like, why are you guys so mean on Tim? It's because of dumbass comments like that. That's why. He does it all the time. All the time. He makes these statements that he doesn't even believe in simply to get a reaction out of somebody else. And so he's got to be called on the floor for it. The only reason he makes the Ben Affleck comments because he knows Ben Affleck is better than Matt Damon.
We've been debating this one for a couple of decades, so I don't think we're going to resolve it today. Yeah, not much here in the markets today, guys. I mean, I guess my final thought is very simple. For everybody who attended yesterday's event, man, we appreciate you guys. I thoroughly enjoyed that.
That was fun.
Yeah, it was a blast, man. And all the coaches, they bring just a skill and an experience, a depth at different levels. Obviously, you've got Cody and Noah and Emily and Tyler. And I loved how they took it topic to topic to topic to topic. I got something out of every one of the segments, Matt. There's no question.
I'll tell you, Tim, I said this yesterday, but I've been trading on Thinkorswim for about 12 years. I use the software and the platform every day. And watching M fly in Thinkorswim, I was like, You can do that? When did they add that? Right. And the answer is probably never. I just never used it. Right. I loved Emily and her breakdown of Thinkorswim yesterday. I thought it was really, really, really solid. Really enjoyed Frank on scanning. Frank kind of walking through how he scans and how he uses FinViz. Cody on swing trading options and the discussion on, why we buy more time, no on technicals. I really enjoyed it, and I hope the community enjoyed it as much as I did.
Yeah, it was fun. And Mark, you were the highlight of the day. There's no doubt about it. We've already referenced it here today, but if you've not seen the replay, give it a watch. I know it's a long one. Pause it, save it, come back to it. We're going to try to break up those segments, Matt, and get them posted individually as well.
Cody said, and I'm putting words in his mouth. He said by Sunday, I believe is what he said.
Oh, is that what I said?
Is that what you said, Cody? I think you said by Sunday, right?
I said Tuesday, and he said, let's come in the middle of Monday. And I was like, no, Tuesday. And you're like, Sunday.
Are we sure we didn't start this negotiation on Monday versus Sunday?
No, we didn't.
Okay. I just wanted to make sure.
Whenever you get them done, make it quick and make it awesome because I know the community
hey,
will love
we're
it.
going to get them all cut up. We're going to have them on YouTube, and we'll probably put them into Tackle Daily emails, and we'll probably have all the links on a blog at Tackle Trading for everybody, so you can go review.
Yeah.
Adam, yes, for the win.
Oh, well done.
Well played, Adam. Yeah,
well played.
All right, guys, that is it for today here. Tackle Trading's halftime report. We'll be back tomorrow with Breakout Frank. That was the one section I did not get to see last night. Matt, I got to go watch the replay here this afternoon. I had a power outage here in the neighborhood. Construction crew literally cut through the main line. My power was out for about a day. I think we lived, though. You know, it.
Are you sure?
Yeah, I think we're okay. I think we're
Because
okay.
like my wife last night was like, do you need to go get Tim and the dogs and bring them down here? And I'm like, this is like 11 o'clock at night. I'm like, I think he's okay.
I think we were just okay.
Open the windows, you know, it'll be fine.
Yeah.
Yeah,
All right, guys.
and I think you need to think about the things you put out in the universe, and maybe power lines wouldn't
Like-
be cut as often.
Karma, brother.
So you think the universe preemptively cut my
They
power
understood-
line
yes.
because I questioned a Kevin Smith movie that you
Yes.
haven't seen in 20 years?
Yes,
Okay.
I think
It's
that's more.
logic. It's all
Listen,
connected.
Hey, that's some more solid logic than some of the logic I've seen out there in the social media universe on buying XYZ company. So
Yeah, I got you.
Flying elephants, 2020, man.
Flying robot elephants. You watch. All right, guys, we're out for today. If you've not yet done it, click the subscribe, click the bell, come back and join us every day. And if you're not yet a pro member, 15-day trial in the comments below. As always, it's pretty easy offer. Come see what we do on the back end of Tackle Trading. So come and join us. Chat making
that's
you laugh
right.
again, Maddie?
Me and Cody are brothers from another mother. Look at that.
I see. I
What
like
was
it.
that?
All right, guys, we're out for today. We'll see everybody tomorrow.
Later, everybody.